All right. Welcome, everybody. Thanks for joining me this morning. This is Ron Sneller, financial services professional by day, professional wrestler by night. And I am super excited for our podcast today. My guest is the president and founder of the Legacy Realty Group, real estate investor, super agent, Brandon. Welcome to the show, man. How are you this morning?
Good. Thanks for having me, Ron. I appreciate it. And you and I could do this for hours on end, and we'll limit it today for now. But
Yeah.
appreciate you having me on.
You got it, brother. So I have been interested in real estate on and off for quite some time now. I do have one rental property that I was able to kind of transition easily because it's a house that I used to live in. Then we last year we bought a new house and kept the other one as a rental. So that was an easy way for me to dip my toe in the water. But I'm looking forward to learning a ton from you today, and anybody who may be watching this. I know that they're going to be really interested as well in what you have to say. Now, more importantly, on top of Brandon knowing about the real estate market and real estate sales and real estate investing, more importantly, he has a lovely wife, wonderful children. He's a father. He's a family man. He's a husband. He's a terrific guy. And I think that's why he and I have really connected connected in business because of the shared values that we have. So first of all, Brandon, tell us a little bit about you personally, your family, like, what kind of you guys do and what makes you tick.
Yeah. So my wife, interesting story, I guess. My wife and I met at Jessica. We met at Michigan State. Actually, we went to school there. She was a softball player there, and I played hockey there. And we ended up we were dating other people. Actually, had long-term relationships in college, and she ended up seeing me in the cafeteria one day, and I think I was with my one of my past girlfriends, and she was, with one of her softball players friends, and she was, like, oh, and again, these are her words. I'm not bragging about myself or anything, but she's like, wow, like, who's that guy? And I guess her friend was just like, oh, he's taken, like, that's his girlfriend behind him, like, whatever. And so, like, she had initially seen me, like, when we were like, I was a freshman actually, and she was a sophomore. She's a few months older than I am. So she saw me early on, and then I actually kind of ended up learning about her as the years went on, and kind of seeing her like in passing, but like never really met her, never really actually saw her. And like, I actually had some people I knew that knew her well on my team, and would, just always heard great things about her. And then I ended up meeting her one day, like when I think I was a senior. She had just graduated actually, and she had came to our apartment, and because of one of my friends I was living with, one of my teammates, and they were visiting. It's her and her sister. And I think I was like playing video games at the time or something like that. It was like 2009. And I like, they walked in. I just like gave like a, hey, whatever, like didn't pay him any attention at all. And she like found out I lived there, and she was like, oh my gosh, like no way. And I think we were still both dating the same people we had been dating like 3 years earlier. And she like came back like the next week because she knew I lived there. And then that's when I actually ended up like really meeting her, and I put two and two together, and then it was just kind of like literally like love at first sight. It was like one of those things where I never believed in that until we met, and we ended up like a few months later, in the next month or so, like breaking up with our long-term relationships, and then we eventually actually like we dated for a while, and then we actually broke up after like it was like summer, like end of that, it was like spring, and then summer we like kind of were dating in the traditional sense. We were just seeing each other, weren't like exclusive or something like that. It's and so we ended up going our separate ways actually, because she was trying to figure out what she was going to do, if she was going to go to law school or go to graduate school. And then I was trying to figure out where I was going to go play hockey, because my senior year had ended. So I was trying to figure out what city in America or Canada I was going to be playing in professionally. So we ended up going our several ways in the fall, and which is really tough on me. Like my heart was like broken. I was like beside myself, and because I was just head over heels in love with her. And so we ended up going our separate ways. And for like 2 years, actually 2.5 years, we'd keep in touch like here and there. And we would, a couple times a year, we text each other back and forth. And I ended up starting to date someone in the meantime, just like to, just try to move on. And we ended up like reconnecting like 2.5 years later. And I don't know if we saw each other, or I can't remember now what happened. And we ended up like seeing each other. And then I was just like, I've always like she was like my love of my life. And I was like, I have to like find out if this is real or not. And so we ended up getting back together, and just like, what, as soon as we were back together, it was just like, what were we doing? Like, what? That was the stestupidest thing in the world to waste the last 2.5 years. I mean, not wasted. There was a lot of great people in our life in between there. We were very fortunate, but it was just like, what are we doing? Like, what in the world are we doing? So ever since then, we literally got engaged, like, I think like in the 8 months later or something like that, and married within that next year. And
oh, wow.
Yeah. So we got married quick, and we knew what we wanted. And then I'm trying to think, 2016. So I was all within like 3 years. 2016, we had our first daughter, Lennox, and then in 2018 we had our second daughter, Theodora, and then we're expecting a third one this September. So I don't know if it's a boy or girl yet. They've all been surprises. So that's yet to be seen. So we're excited for that. And and that's kind of like the family side. And the business side is, she's an attorney, and she works for her father up in Saginaw, Michigan, actually, where she grew up and where her family's from. And so she works for him up there at Lefevre and Lefevre, and does Social Security law now. Actually been doing that for 5 or 6 years. So we have some interesting talks about that, and just the social security side of things and what's going on there. And wow. That's what she does. So that's what she does. But then we're slowly, over the last few years, we've been, building our asset column, and just kind of really starting to kind of focus on, the secrets of the wealthy, which we'll get into, obviously, which is building the asset column and focusing on the financial statement, the report card of your adult life. And so that's what we've been focusing on the last few years, and just really kind of took it to the next level this year. And again, we'll talk about that a little bit here, just the mindset people have, but like the coronavirus, the pandemic, whatever. I mean, that was, to us, I mean, that's gonna be a defining moment when I look back in my life. Like, wow, things have been so much better because of that for us. And really, it's just a mindset, right? It's a mindset you have in your head. I mean, everything in life happens, for a reason, and you can either use it for good or use it for bad, and you're in your own head, and it's all up to you. So anyway, we'll get into more of that, but that's being at home more with the kids and the wife, and realizing how much we weren't together beforehand, in the normal times, really kind of shed a light on a lot of things, and also just made us more intentional about what we were doing, and helping us focus more and spend more time together, so we can accelerate our growth and build our asset column. And like I said, it's been a huge blessing in disguise.
Mm-hmm.
I mean, I've got more done in the last 3 months than I think I might have got done in the last year. And I thought I worked hard before, but it's like I'm spending more time with family, but also getting more done at the same time. So it's a pretty interesting dynamic. Mm-hmm. And I tend to just laugh when I hear people. And again, I'm a weird dude, and it's like, I got done with my workout this morning, and it's like I'm trying to better every single area of my life, and it's one of those things I laugh at. People are like, I gotta lose the 20 pounds I just gained in the last 3 months, and it's like, that's just a mindset. That's because you told yourself before, going into this, like, oh, cool, it's like time off to just screw around. And it's like, there's people out there getting better. Like I was that weird kid when I was growing up playing hockey, like shaking in my bed at night because I like thought some kid in Russia was in the middle of the night was like getting better than me. And that was like my mentality. And I still have that. And it's like really an extreme mentality, because when I go out on vacation, I shut it off. Like, it's very hard for me to come back. Like, it's very hard for me to turn back on. And then when I'm on, it's very hard for me to shut it off. And like, I know that. So it takes me a day or two legit to like get back into things. And like, I'll like almost be in like a little, even like a little depression almost, because I'm just like, my whole body, like chemistry has to change. It's like, it's really fascinating. But anyway, that's, I'll get off my soapbox, but that's kind of our story, I guess, our family story, and kind of where we're at right now and what we're doing.
Well, that's really cool. And that's one of the things I really admire about you is your mindset, and the fact that you are building your business, you're building your asset column, not just because you want to try to make money so you can like pound your chest and brag about how much your net worth is. Like, you have goals, and those goals are about taking care of your family. And those goals are about providing value to other people, and giving your family the opportunities in their life to spend more time together, and to be able to focus on what's truly important in life. And I think that's incredible. Now, before we like dive too much into like your business, because we're going to talk about a lot of awesome stuff today. I think we need to acknowledge, like, you're not an old guy. You are like one of these up and coming superstars under 40 that people recognize you for. So before we dive into like some of the specifics of your business, tell me, like, how did you end up getting into real estate? Like, what gave you the real estate bug?
Um, that's a good question. I don't know, to be totally honest with you. So I was in, I like, for some reason, I was like house. Like, I remember in high school, probably my earliest thoughts of liking real estate and liking housing, I guess, and like building, stuff like that. And then I was went to building construction management initially at Michigan State, which they have an incredible school there for that. And now looking back, like, stupidly, I got out of that after my first year because it was a lot of guys in there. I honestly, I don't even know how many, if any, women were in any of my classes. I mean, it was interesting. It was only 10 years ago, but it was guys in Caterpillar boots, and it kind of intimidated me because had no on-site experience. I wasn't on construction sites growing up, other than, working on stuff in my backyard with my dad. But like, a lot of guys had like all this experience, and it was intimidating. And it was like me and two or three of my teammates actually. And I think we all transferred out because we were, maybe got inside of each other's heads too, the echo chamber. And we just kind of scared ourselves, like, oh my gosh, like we can't be doing that. Like, we don't have experience to even do it. And we don't have time to be doing that. And looking back now, what I'm doing, I wish I would have stayed in that. Unfortunately, I didn't. And then I got into political science, which I then was like, talked myself out of that because I always loved politics and law and all that stuff. And I got out of that because I talked myself out of like, oh, I don't want to be a politician when I'm 30, or 40. So yeah, I'm not going to do that. And then I ended up getting into that. So then it was like my junior year, and it was like I'd kind of hamstrung myself a little bit because I spent all that time changing majors. And then I got into like pre-law and economics. Basically, it was like interdisciplinary studies, more of a general thing. But it was like had a pre-law and econ focus. Which again helps, still. So all my classes, everything I did, ironically, kind of helps me do what I'm doing now, in just kind of the macro aspect and the micro too, I guess. But I kind of have a little bit of everything when I went through college. So I don't know. I don't know what got me into real estate, to be totally honest with you. But then once I left school, I played hockey professionally for a few years, and then I stopped. And in that meantime, I was still studying the news like crazy. And I started really getting into personal development. That's when I left college, I got into personal development, Jim Rohn. I found Jim Rohn and Robert Kiyosaki. That's where like the big catalyst for me, I think, was the housing or the crisis, really the housing crisis, with the great financial crisis. And, I was a senior at Michigan State then. So that was a defining moment in my life also, where I just watched the stock market just going through the floor. And I remember thinking to myself, like, wow, I remember vividly being in my apartment actually at Michigan State and being like, wow, there's a game being played on all of us, and I'm going to figure that game out. And and lo and behold, there's a game being played on each and every single one of us. And it's there to be learned. It's not like it's necessarily hidden from anybody. I mean, it's in plain sight for the most part. It's just so well veiled, as and just so many layers of jargon and all these different things that it makes it seem impossible. And it's just a different language. It's just knowing that language is speaking a different language is really what it is. It's just like learning Italian or learning French or something like that. It's just learning another language and then beginning to speak that language, and you can start deciphering what's going on. So the last 12 years, that led me into Kiyosaki, maybe 2010, Jim Rohn, 2011, and then getting into that. And I was in a network marketing company actually around that time, 2010, 11. I really never been in entrepreneurship at all. So that really got me into that was like a place I knew I needed to be in entrepreneurship. And it was like great sales trading for like a year and a half. I was in it. Again, Jim Rohn, Kiyosaki, all these guys I was like really introduced to was what helped me kind of catapult me into Kiyosaki's book, not Rich Dad Poor Dad, which is what everyone kind of talks about. It was Why We Want You to Be Rich, ironically, with Donald Trump and Robert Kiyosaki. Okay. Yeah. And that book was like, I just saw it in a grocery store one day. It was like $5, like in the bargain bin. And I knew who Donald Trump was, but I didn't know who Kiyosaki was. And I picked it up, read it in like a day, and it just blew my mind. And it's I think I've got it right here. I got the original copy, and I bought another copy just so I'd have the original, because I was like, that's my life-changing book right there. Yeah. And it basically really ticked me off, number one, because I realized like how the school system just completely, like, it just confirmed everything I thought about the school system, which is it's completely broken. Most people don't learn well that way, et cetera, et cetera. Your money needs to work for you, not you work for your money. Like all these concepts I knew in my head, but I didn't have, anyone in my life really explaining those to me growing up. And it's most of our parents, they weren't explained that. They didn't know. It's not their fault. They just were passed down with what their parents knew. And I I had that book and I was like, it just blew me away. And I was like ticked off. I was like, I had like all this hope at the same time, because I was like, wow, like I know the way out. I know what I need to do. And it was, building your asset account. It was, the wealthy work for assets that pay them so they don't have to work for money. The rich don't work for money, which is rule number one for Rich Dad Poor Dad. So, it was just that kind of catapulted me really at that point, probably 2010, 11, with that book. Was like, wow, okay, real estate is the way I need to go. And that kind of like solidified it. And then a few years later, I got into realty and real estate and started building the team we have now today.
Oh my gosh, that's amazing. Yeah. And I knew that you went to Michigan State. I knew that you were well educated, but you and and I'm a former educator. My college degree is in secondary education with a history major, English minor. Yeah. Yeah. So I used to be a teacher for like the first decade of my professional career. And I kind of had a little bit of an awakening, somewhat like you did, because you could be well educated under the traditional models and still don't really truly know anything about the real world as far as how does money work? How does business work? And so then when you start getting involved with some of these things like network marketing companies and like influences of Robert Kiyosaki and Jim Rohn, you start to realize I have to like de-educate myself from some of these things that I've been brainwashed with because it's garbage, and start learning like the path of successful people. So that's an incredible story there.
Yeah. But one of the things really, really quick, I can't remember what founding father it is. Cause like I'm a really big like nerd, like when it comes to like founding fathers, like history and all that, which is super interesting. And this is going to be like really interesting. I think most people aren't going to know, but if anyone wants to see really incredible history, go look up like the Black Robe Regiment, which is actually a lot of like the Black founding fathers. Actually, they're out there that literally have been totally just covered up in history. It's fascinating, like preachers, everything. And like, they were such a big part of the movement. Well, and it's a very obviously pertinent time to talk about something like that. But I feel like this country would think very differently if they knew things like that. So that's just something that, again, I think it's important to know your history and where you came from. But the reason I kind of got in that tangent was there was one of the founding fathers, I can't remember who it was now, just said, once your formal education ends, then your real education begins. Yes. And I just, that made me think of that quote right there, or what you were just saying.
I've heard of so many people that, they graduate college and it's like, oh, thank God, I'll never have to read another book again in my life.
Right.
And, I always liked to read, but I always used to like to read fiction. And I interviewed another buddy last week. Actually, his name is also Brandon Perry, where I got introduced to his network marketing organization back in 2011. And it was all about personal development. And they were like, hey, you know what you ought to do? You ought to read books about how to make yourself better, how to build a business, what to do with money, things of that nature. And it was really inspiring. And it really helped me kind of get out of my shell and grow. So you're absolutely right. It's like once the formal education ends, that's when the real education should begin.
Yep.
So listen, we're going to talk about a lot of things, and probably some of them, kind of advanced and pretty cool. But let's kind of ease into that, right? So let's say, for example, you have somebody who is a novice like me in real estate investing, or somebody who's brand new and hasn't even purchased their first property yet, but they're interested. They want to get involved. Maybe they've heard of Robert Kiyosaki and read some of his things, and they're interested. What would you say would be like one or two key tips for somebody getting new? Like, what advice would you give to somebody who's a new or aspiring real estate investor?
Well, we'll mix formal education with your new education, what we just talked about, actually. So it's kind of a good segue. I would do one or two, or both of these things. I would go get a couple books. So on like the formal side, if you will, and then like the way I think is best to do it and kind of couple that with it is, find someone to help mentor you,
Okay.
And the best way to do that is to, hey, can I work for you? I just had someone do it this week. Actually, I just had a younger guy reach out to me and ask me to come help us and our firm any way he can. And he was like, I don't want to be paid. I would love to just come learn and see what you guys are doing. Because I know you know what you're doing, and I know I don't, so like it's one of those things where if you can offer that to people, I think that's a huge way to get your foot in the door and be mentored, because as you know, most of us know, I think that mentoring and apprenticeship is really the fastest and easiest way. I always look at the cone of learning, and you have like a book is great. It's at the bottom of the cone of learning. You remember after 2 weeks, 10% of what you read, but 90% of what you actually do, like in real life. Right. So, you know, you gotta, you know, school's down here doing the reading and the memorizing when you don't remember any of that, but people up here at the top that are simulating the real thing or doing the real thing, they're actually remembering what they did because they're actually doing it. And so if you can combine those two things, I think what reading is good for, like I love reading, I absolutely love reading, but what reading is good for is context, like opening that context and expanding the context and realizing there's something different out there. Then you can go use that and go apply that now in the real life world and go do it. You know, so you have to combine those two things and make them work together. So I think that's what I would do. I would go pick up a couple of Robert Kiyosaki books, and then I would start finding people in your area. I mean, it's easy online now, obviously, with you know different groups and Facebook groups and all these resources online. Go find people that you can, you know, offer to help them for free for, you know, a month or whatever it is, and just say, hey, what do you need to do? You know, me to do. I would love to just learn and see what you're doing. And a lot of people don't have them ask that question, you know, and I try to do that to the people that are way above me. And how can I do that? How can I, you know, get them on a podcast, or how can I, you know, help expand their base, or, you know, what is it I can do for them? So I think those two things combined are something that anyone can do to jumpstart themselves.
Yeah, I think that's key. So it sounds like you're saying, let's spend the time like reading and learning, get that knowledge and that theory, but you've got to go out and apply, or it really means nothing. But it sounds like what you're saying is by having a mentor, you're able to kind of like dip your toe in the water, like not jump in all by yourself, because then someone could help, like, you know, guide you and help you like apply that theory and that knowledge that you read about.
Exactly.
And I watched one of your recent podcasts. You had a woman on named Wendy. I can't remember her last name. But she had kind of been like instrumental in like helping you. You know, you said that you had learned a lot from her, and then, you know, conversely, now turning around, like you're helping other people now. Isn't that interesting how that works in business?
It is. Yeah, it really is. It really, I mean, like you said, I mean, like one of the big things in business, you realize, I think the most successful people, well, they want to give back, you know, they want to give back. And those that don't try to be insular, you know, you kind of cut off your growth.
Interesting. Now, you had mentioned a couple books for like beginners. What would be like one or two of the titles that you would advise, like somebody brand new, this is where you should start, like these one or two books? What are those titles?
Honestly, Rich Dad Poor Dad is probably, you know, a great one to do. The one I was talking about earlier, Why We Want You to Be Rich, is a great one as well. The first couple of Kiyosaki books are awesome. And again, I know there's some people that can't stand Kiyosaki. And I think the people that don't understand him or don't like him don't understand him. And they, like, a lot of people want to, like, how do I do this? How do I go actually buy this property and do this thing? Kiyosaki is more of the mindset. He's like, he's a mindset, like a context expander. He's not a content person. You can go get books that are like how to A, B, C, D, you know, that's a content. That's content. Context is, like we just said a minute ago, opening up your mind to like, wow, I didn't even know that was a possible thing in life. That's a context. And that's what Kiyosaki is great for, is opening up your mind to do that. So I think the first couple of books in his series are great, so that way you can get your context changed and kind of realize there's different ways of looking at a lot of different things in life, not just even real estate, but just how to think about money, currency, I guess we should say, how to think about currency and just, you know, that in your life. And so those are really good ones. On like there's a bunch of, like, even biggerpockets.com obviously is a huge real estate site. They have a lot of books. They have a lot of books that have been written. They're pretty easy to understand for the person that's just getting into real estate. And they've got a lot of different topics now. They've really expanded their author base and who's written books there. So I think that's huge. And then honestly, if you want a little bit more content, the Rich Dad Advisor series is awesome. And that's, you know, his real estate guy, Ken McElroy, Garrett Sutton, his attorney, you know, Tom Wheelwright, his tax advisor, tax-free wealth, stuff like that. Like that, those are a little more content. So if you want to kind of get into that, then you can go that route with the advisors. And because again, he uses a team. One of the big Kiyosaki, you know, snubs of him is like, well, he doesn't know anything. He just says, it's like, yeah, that's the point. Like, he's showing, it's not, don't listen to what he says, listen to what he's doing. You know, he has his team writing books to explain the things that he's talking about. And I think that's what a lot of people miss, is team. And you only get so far as your team is. And he always used an example of, if I go out in the field against the New England Patriots, I'm just by myself, I'm not going to fare too well, right? I have a team that helps me do what I'm doing.
Right.
So, yeah.
That's awesome. And you probably see me over here grinning like a bloviating idiot. But the reason why is, as we started talking, I thought to myself, Brandon's absolutely right. Kiyosaki's like the content guy. He's very in your face. Like, this is what you've been taught. Here's why it's crap. And I am going to challenge you with a paradigm shift.
Yep.
But
expand that context.
Yep. But the Rich Dad advisors have written the how-to books.
Yep, they have the
bigger
content.
pockets.
Exactly. Yep.
So literally, as you were talking, these things are popping into my mind, and then you said them immediately afterwards. Like you're reading my mind. And again, we think a lot alike, and that's why I love talking to you. So very cool. Now, as much as we do have a lot of similar beliefs on some of this stuff, I'm a complete novice compared to you. So the next thing I want to ask you about is your real estate firm, because it's a little bit different than what people are going to find with your average firm. So how are you different than the average real estate agent or the average real estate investor? What sets your firm apart, the Legacy Group?
Yeah, I mean, I think that one of the big things is we have a lot of transactions under our belt. I think that's a big thing. And I don't care if you have 1 year of experience or you've got, 20 years experience. We have, we've done a lot of transactions. Fortunately, we've been blessed to have done a lot of transactions. And I think that's important. Like, you can have an agent in California who maybe has sold with one home, has sold more volume than our team has in 5 years. But our experience far outweighs theirs because we've seen 300, 350 different things, probably almost 400 different transactions, different things that come up, different, problems. You can multiply that out into how many things we've seen where someone who's done one deal, it's going to be very hard if you get into these problems, these situations, it's going to be very hard for them to solve those problems. They've never seen them before. So number one, I think that's the thing that people always have to ask if they're going to use a real estate person. How many transactions have you done? Yeah, actually, and how many problems have you seen? I think it's even a better way to phrase it, because it's, I know agents get it like, how many transactions, but how many problems have you seen? Tell me some of the problems you've encountered. I think that's a great, just like you go in a job interview, what do they say? When's the time you've been a leader before? When's the time, like that's something I think I would ask any person really that you're hoping to advise you on what you're doing. So that's kind of one way I think that we're different than a lot of people. And plus we have a team, like we just talked about having a team. You pay us the same thing that you would a single solo agent. We have a team of people. We've got operations manager, a transaction coordinator. We've got multiple agents, people that focus in on specific areas of the business, because I know I'm not the greatest at every single one of those areas. I'm not. Before we came on air, I was just telling you, like, I'm not the best, people manager in the world. I'm not the best, person shuffling paperwork and trying to keep it all organized. It's not my personality. So I have people that we employ that is their personality. They're like the disc test, for example. They're a high C. They're very organized. They're very structured, and they keep those things on track. They keep deals moving forward, and they allow us to go then service clients while their deal or the paperwork's being managed and being pushed down the road and to completion, to the sale date, closing date. So that I think is huge, because that really sets us apart compared to 99% of the market, because vast majority of people are solo, and it's hard to be the clerk and the guy who pumps the gas and does all of that. Business doesn't work that way.
Right.
So I think that's one thing. Another thing that sets us apart. And then the thing I think that really, even besides those things that sets us apart, is what, again, we talked about it off air a little bit, and we talked about this more recently, but we kind of have a different approach of selling homes, in the fact that, one, we use a ton of social media. And again, 95 to 98% of agents still don't do that yet, and which blows me away. I mean, honestly, 90 to 95% of businesses don't even use social media. I think the last I heard was like only 6 to 8% of businesses use Facebook ads, which is, wow. I mean, that's a whole different topic we can get into another day, but that's absolutely mind blowing that you have people still using billboards and stuff like that, which literally, and we're not going to go down that road, but anyway, so we use, instead of putting our face on a billboard, for instance, we're putting, your house or client's house on a Facebook ad. So we both win, because we're getting the leads, and only one person can buy our client's house. So we get a buyer for your house, we sell your house, and we also get other leads that might turn into other clients for our team. So it's a win-win, instead of the traditional model of like, oh, we're going to put our face in a magazine, or we're going to put our face on a billboard. And you see that happening nowadays still. and they're just selling themselves. So the client's not winning. So that's another way. And then I think the other way is, and we've touched on this a little bit, is kind of what we're doing for sellers, which is providing them options, which most agents, again, can't do that. And because of many reasons, they don't know that the options are available. We're kind of combining the investing world with the retail world and providing sellers options to sell their house, whether it's a cash offer right there, in 7 days, close in 7 to 14 days, maybe joint venturing with them, seller financing with them, them using seller financing, or maybe the best route for them is putting a sign in the ground and selling and opening up to the public market and doing the retail route. But it really comes down to, what does the seller want? And I think over the last couple of years, we started this in like 2018, probably January, February 2018, we started going to sellers and saying, hey, we've got multiple options for you to sell. You don't have to just wait and try to get this on the open market and see how long that takes. Close in 30 to 60 days or whatever. So we give them different options. We've got tons of great feedback and started slowly rolling that out in 2018. And then now we've kind of just, put the pedal to the metal over the last 6 to 9 months and started doing that. And obviously people know the bigger end of things. They see Zillow Instant Offers and OfferPad and all these different other digital platforms that are trying to do that. It's a very macro approach. They just have like an algorithm. They just spit you out an offer, and it's who knows what it is. It's usually really way under what your home might be valued for. But some people take it because they're like, you know what, it's done. It's right there. I know I got the money. And so we're doing it. It's a more local approach. It's we know the market better. Obviously, we're down the road. We can actually visit with you, and we actually can give you multiple options on how to sell your home. Because again, some people are like, hey, I've got the time. I want to see how much I can get. Okay, then you might be, it's a really nice house. They might be just your, average, normal, typical retail sale where someone comes in, maybe we see a lot of people in inherited house or something like that. And there's a lot going on. There's a lot that needs to be done, a lot of work and money that needs to go into it to fix it up, to get it on the market. They might just be like, hey, you know what? I'd rather if you guys give me a cash offer of X, then that's great. Let's do this. Let's close in 10 days and, I'm clean my hands of it and we're on our way. So it just depends on what the seller wants. Because again, a lot of agents go into it. They don't know that inherited house. A lot of agents don't know. It's just we're going to throw a sign up and hopefully we'll just really underprice it. And investor comes up buying it anyway, probably at some point. And they just wasted, who knows how much time trying to, stress out about it. So anyway, that's how we, I think, really differentiate ourselves in those really 4 big areas of what we're doing differently and kind of riding the wave. I think the industry is going to change a lot in the next 5 or 10 years. And you're going to see a lot of agents who, if they can't provide those options for sellers, they're going to have a really tough time going forward.
Right. Well, I think that's what makes the Legacy Group, what gives you guys such a competitive advantage, because you guys are constantly innovating and you have all this experience. I mean, you gave the example earlier, there might be an agent out in California with a different market who's done a few transactions, but they're really high volume, right? So he makes his money and does what he has to do. But that doesn't actually give him a lot of practical experience, even though his volume number is higher. You guys have done multiple transactions in multiple different fields. And I mean, obviously the guy out in California, that's a different economy, but I know that you don't buy into this whole economy thing, right? I've heard you say, and a lot of people have talked about COVID-19 and the coronavirus and what it's done. And a lot of people have struggled, right? But I know I've heard you say before, you're a big proponent of the economy is in your head. Why do you say that?
Yeah, so that's a great question. And that is, as everything in life, it's in your head, everything in your life. And this is something that I'm super passionate about because I didn't truly understand it as a child. And, kudos to my parents for trying to get me to understand it. But I think for whatever reason, I just didn't take to it as I should have or could have when I was a kid. And maybe they didn't understand how to teach it. But just mindset. They knew being positive or different things like that were important. We all know those things, be positive or whatever. But everything happens in life, like you were saying earlier, it happens for a reason. And there's the ability, what you were given as human beings is that choice. An animal can only things happen to them. And it's just I just go with instinct. I just kind of doing whatever I was programmed to do. And humans, that choice, the freedom that all of us have is to choose. There's a lot of things out of our control, but we can choose which way to go every time something happens. And that's, I think, that a lot of people tend to forget about. And I tend to forget about it too. And that's something I'm just continually working on every day. You have to get up and decide like, what is it I'm going to do today? Am I going to go work out again? Am I going to go do X again? And am I going to go make that call again? Am I going to show up to work today? Am I going to kiss my wife when I leave? Like all those little things, those little compounded things are just choices and mindset every single day that add up to the summation of your life. Right this second is just the summation of all the things, all the choices you made previously. And this could be a pandemic, whatever it might be in life, war, those can be great times if you adapt and change and say, I'm going to change. I have complete faith and I'm going to adapt and I will figure this out and God will provide. Or you can say, you know what? Oh, this is terrible. This is awful. Oh, it's so-and-so's fault. This is ridiculous. The government's fault. They should have done this. They should do that for me. Well, then you're just completely abdicating responsibility and you don't give yourself a chance to get better ever, because you're saying it's always someone else's job to do that for you. There's no hope in that.
Sounds to me like you're talking about the difference between an abundance mindset versus a mindset of scarcity or desperation.
That too. Yeah, exactly.
And I think that's
say it. Yep.
Yeah. And I mean, would you agree that that's a huge problem in our society is people who will not take personal responsibility, and because they're unable to do that, they blame everybody else. And you even said like, oh, the government needs to handle this for me. But when you blame somebody else or turn it over to somebody else, whether it's the government or mom and dad or whoever, wouldn't you agree that you're basically like relinquishing your personal power? And isn't that like a downward spiral into 100%. Desperation? Because you're ultimately, you're believing that you have no control over your life.
Yes. Yeah. You're basically just waving the white flag. Like, I quit. I don't have control over my life. I can't make my own decisions. It's someone else's responsibility, which is, like you said, is the problem we are living through in really not just the country, but the world right now. No one's standing up and saying, it's my job to do this. It's my responsibility. Everyone's just waving the white flag and it's the government's job. It's someone else's job. It's my neighbor's fault for screwing me over. And the rich are taking my money when in reality, the tax code is there for every single one of us. But if you don't see the other side of the coin, then you never see that. You just constantly think it's someone else's fault. And that's why I'm not winning, or that's why I'm sick, or that's why I'm out of shape, or that's why I'm whatever.
Right. Well, that's a perfect segue into some of, kind of like into the next questions about people taking personal responsibility for their financial life. Now, I know that you are huge as far as talking about your financial statement and why that is so important. So I think I heard you say, it might have been before we were coming on, your personal financial statement is the most important report card of your life. What did you mean by that?
Yeah. So this is, again, this is kind of from the Kiyosaki realm too. And he talked about this all the time. And a lot of his company is based around the financial statement. If you play his game Cash Flow, I mean, it's a game centered around a financial statement. And, really basically what it means is, again, we've touched on this earlier a little bit. Most of us grew up, we're going to school, and the report card is the most important thing in your life. Well, yeah, I mean, it might be for a little bit, for a few years, just to like look good in school, but it really doesn't mean anything. It doesn't translate to anything. But if you go to, say you're 18 years or older or whatever, and you're going to get a loan, you're going to get anything, well, they're going to look at your credit score. They're going to go look at your income and expense. They're going to go look at your balance sheet. You want to go buy an apartment complex and increase your passive income after reading a Rich Dad book. They're going to look at those things. And that's where, you can't go hand someone your report card and be like, hey, banker, here's my report card. They're going to laugh you out of the place. So I think understanding that and knowing, hey, where my income and expense equals my cash flow, and assets minus my liabilities equals my net worth, equals my equity. So that knowing those things, and then that flows to your cash flow statement, obviously. But those two things, really, the income and expense and the income statement and then the balance sheet, are really the most important things you can learn and understand, because most people, like the poor and the middle class, just look at the income statement. They might have a budget. Some don't even have a budget, but they have a budget maybe, and they just kind of see what's coming in, coming out, and that's it. That's all they have. But the wealthy work off the balance sheet, and they know I have assets and I got liabilities. What do I own and what do I owe other people? And that's where you start to really build true wealth. And then you start to see the patterns. I think what's great about all the Rich Dad books is they talk about the patterns, the flow of the different assets and where the money is flowing. Because, if people knew where their money was flowing, if they were flowing out from them every month, or flowing into them every month, that's going to help you a lot, obviously, to know that and see that. And again, having those visual representations, I think, are huge, or what would help a lot of people see that. So long story short, that's why it's the most important thing, because no one cares about your report card when you're 20, when you're 50. If they want your financial statement, that's what a lender is going to ask for. Whether it's a private lender, someone else you're asking for money for, or a hard money lender, or a banker, or a commercial loan. Every person is going to ask you, what's your credit score? What's your financial statement look like? And most people don't even know they have a financial statement. They don't even know what that means. And that's the fact that that's not taught in school. Again, it's a topic for a different day. That just is astounding. So,
well, I mean, I'll hit on that. I mean, this is the difference, or the paradigm shift, what you're talking about, versus the advice that we're all given: go to school, get good grades so you can get a 9-to-5 job with benefits and a 401k. And these people, like, they're on a salary and it's set. And I mean, you mentioned budget. Some people don't even have a budget. Like, they don't understand, why they end up going into debt. Or, somebody, look, I mean, if somebody's on a salary and if they don't have multiple streams of income, like income that they can control based on their effort, it's like, look, when the year starts, like, you have a pie, like it's a circle. It's a pie. And if the car breaks down, or the refrigerator breaks, or the furnace, or whatever, like, now we got to take a slice out of that pie and it's gone. Like, how do I make that up for the rest of the year? Like, did that just replace a vacation or something? Can I work some overtime? Or, like, if you want to use like school terms, can I get some extra credit? So why is it so important to have multiple income streams over versus just having your hourly or salary job? Like, what kind of flexibility and benefits can that provide?
Yeah. So I think the way I look at this also, I think it's really important for people to look at this. People think of rich, a lot of times I would say, like, if you ask most people, I think they would say, like, what's a rich person? And I would venture to guess most people say, like, oh, if I have $1 million, I'm rich. But if I said, okay, great, you got $1 million, but you spend $950,000 a year, now how rich are you? So that knowing the really kind of definition of wealthy versus rich, I think is huge. And wealth is, like, our Buckminster Fuller talked about this all the time, as if he was a futurist, and probably one of the smartest guys to ever live, up there, definitely probably in the top, 1% for sure, maybe 1/10 1%. But he has a bunch of books like Critical Path. They're kind of hard to read. Critical Path, Spaceship Earth.
They're like written for a knowledge level, like way.
Yeah, I mean, they're a little bit tough to understand. And I'm thinking of the one, forgetting the one really famous one he has, but Critical Path is really good. And Grunch of Giants. That's the one, again, that talks about the gross universal cash heist, about how the elites are basically screwing everyone over. But what he said is wealth is measured in time. And that's what I think is super, super important for people to realize. Time is measured in wealth is measured in time. It's measured in months. So if you stop working right this second, how long could you last with your lifestyle not changing at all? So, we're not going to count you cutting expenses, whatever, anything like that. So if you just ripped out your income out from under you and said, okay, how many months can I last? So you take, obviously, your assets or your savings or whatever it might be, your retirement accounts, you take all that, add it up, and then divide it by your expenses every month. And that's going to give you your wealth number, basically. How many months can you live off of your monies that you have? So that right there, knowing that now kind of gives people the answer of, like, wow, I have this answer of how many months of wealth. And I think, like, it's probably like average American. I just saw a quote actually this week, ironically. It was like, I think most 50 or 60% of Americans couldn't do more than a month. Wow. And we kind of saw that in the pandemic, right? We saw people, screaming for the stimulus checks and all this stuff. And it's sad. I mean, people understood that some of these dynamics. They would understand, just like assets equal your assets should pay for your liabilities. Another great one where you have to understand that if you want a liability, if you want a car, go get a car, but first get an asset that pays for it first. Get a rental property that pays you $250 a month in cash flow, and then go use that $250 to go pay for your $250 car payment. Because then you have this asset that pays you forever, and then that liability is paid off in 5 years, and then you've got both. And then, so you're just continually growing your wealth. And so wealth is measured in months. And that's what's, incredibly important to understand. Because once you know that, then this is where multiple streams of income come in, because you have to really start building multiple streams of income, whether it's passive income or residual income or whatever it is. Residual income would be like dividends from the stock market. Passive income would be real estate, where you're still kind of working on it and managing it, but it's passive and it's coming in every month. And you have that. So, like, if you work, you get hurt or something like that, that money is coming in every month and it's still funding your life, whether you
Mhm.
work or not. And that's why building up the different types of incomes, passive, residual, portfolio income, building those up, and then also building multiple streams of those is so important, because you don't know what's going to happen in life. I mean, obviously, you're in the insurance world, right? So
Right.
you want ways to protect yourself, whether it's a good insurance policy, real estate, good dividend, paying aristocrat stocks, whatever it might be, they're paying you
Yeah.
well. So that's the multiple streams of income, obviously, that we all need.
Awesome, man. Awesome. So what do you see coming up with the real estate market here in the next 1 to 2 years, as far as the economy and how it's going to affect the real estate market?
Yeah, and I love this question. It really be because everyone's answer is different. I think that's where from all the people that I see studying people all the time, I see this year probably being a lot of what we're seeing right now, right this very second, which is the market's fairly hot, basically. Houses are priced fairly high still, and they're going, if they're priced well, they're going fast. I don't see that changing between now and the election, just because it's an election year. So I mean, they're going to do everything they can to keep that propped up. And then after that, I think it's anyone's guess, to be totally honest. I mean, that's like the 1 minute version of, I think it'll be the same going forward. I think it's going to be interesting. It could be interesting if they let things expire this year, but I don't. I think we're going to see unemployment probably get pushed. We're going to see, who knows, student loan deferments get pushed. I think we'll see a number of these things get pushed out to after the election, to 2021. And then 2021, 2022 is, I think, when you really start to see fireworks at some point, because you can't have 40 million unemployed and just say it's only 20 or 30. Because I know some, like Jessica, my wife, has said many times, like, yeah, there's a lot of people like that she knows or whatever that have worked with, and they are looking already, and now they're coming back onto the dole. So it probably inflated some of the numbers to make it a little worse than it was, or look worse, a little bit worse than it was.
Okay.
So, say there's 20 to 30 million unemployment, truly, still, that's insane. That can't happen in a vacuum, and something else in the economy has to be affected because of that. So,
right.
Evictions, a lot of that stuff was halted. So, I mean, we're going to see stuff happen here. I think it's going to be probably 21, 22 before things start to happen. And then at the same time, I'm the guy who was telling everyone the market was going to crash in 15, 16, 17, like, hey, it's going to crash anytime now, get prepared. And it didn't. At the same time, I mean, like most of us couldn't have foreseen, negative rates in the world, zero interest rates, them printing money, QE 1, 2, 3, 4.
Infinity.
Yeah, infinity, right?
QE infinity, yeah.
Exactly. So, I mean, the house of cards comes down at some point. I mean, part of me thinks now more like, hey, it might be another 5 years, 6, 7 years until we have like a true crash, like we should have, like a Great Depression style, like we have to have a crash to weed all the garbage out, because we still have not had that. And that's what I'm waiting for to happen. But I think in the short term, this year, I think it'll be the same. And then 21, 22, maybe you see some fireworks, but it's got to come down at some point. I think this decade will be very interesting for sure.
Wow. You mentioned something I wanted to touch base on, because one thing that I don't know a lot about is currency. And you mentioned earlier, as far as like the low and negative interest rates, and because the government's done an awful lot of intervention, not just with the COVID-19 situation, but for the last 10 years, from the housing crash and the stock market crash through the last decade, there's been a lot of manipulation, a lot of printing of money, and especially recently to try to prop things up through this coronavirus era. And, over the last couple of years, like the Federal Reserve was starting to raise rates a little bit. But at the end of 2018, they raised rates like 0.25%, and the stock market dipped like 15%, like within a week or two. It was right around Christmas. There was like this big Christmas Eve crash or something. And what did they do? Oh, I guess we can't lower. I mean, they're afraid to lower short-term rate, not long-term rate, just short-term rates, even 0.25%. Yeah. And now they've turned around and they've lowered them. And now they're talking about, well, we're about as low as we can go. Maybe the United States will go into negative interest rates like some of the other countries of the world. Yeah. If that happens, why would the average American citizen have to be concerned? What would it mean for them?
Yeah, really. So two things, actually. First, I'm going to touch on really quick currency. The reason I said that earlier too, and I made that distinction, was currency and money are very different. And currency is just a medium of exchange, really. That's basically all it is. And we are on a fiat currency, system, fiat, money, I guess. But money can't be printed. It's gold, it's silver, it's, and if anyone wants to fight about that, I would go Google 1920 dollar bills and $1930 bills before we are taken off that. And it said it was redeemable in gold on the dollar bills, because it was just a claim check. All currency is a claim check for real money.
What does it say now on there, Brandon? What does it say on our bills now?
Yeah, you know what? It says it's just Federal Reserve note and this,
Federal Reserve note.
Yeah, exactly.
I'm just slowing you down. I'm slowing you down because for my friends who are watching this, my Facebook friends, they may not know what that means. What does that mean? Federal Reserve note.
It's an IOU. That's all it is.
It's a form of debt, isn't it? To the Federal Reserve.
That's an IOU. You might want to keep that one. That's a Ferrari. That's a Lambo. That's a Lambo. That's a Ferrari. You might want to keep that one. So
there you go.
All it is. It's just an IOU. And that's, and then again, we could get into that too. I would say like the Treasury and the Federal Reserve, all they do is swap IOUs. And that's how currency comes into existence. They sell bonds. The Treasury sells bonds to the Federal Reserve, and the Federal Reserve writes a check, another IOU. So you have two IOUs basically changing hands, and out of a bank account that has nothing. The Federal Reserve has nothing. They don't have there's nothing there. And so it's that currency swap with middlemen. The banks are the middlemen. They're the intermediaries. So they get profit like all along the way, the whole time. So it's just incredible. And then so currency springs into existence and then goes back to the Treasury. So then you have a buildup of Treasury notes, which are dollar bills, and then you've got a buildup of bonds. That's why people always hear like the balance sheet of the Fed, the balance sheet of the Fed. That's because those bonds are then sit on the balance sheet, the asset column of the Fed. And so, and then the Treasury notes, those get spent into circulation through entitlements, spending or whatever that might go into whatever. So that's how it goes into circulation. That's how currency is, very long story short, that's how currency is printed, not actually on a printing press, but that's
created.
How it happens. So
how it's created. So you're making the distinction that money is something that has inherent value, like gold or silver.
Exactly.
And currency is something that's created. And I mean, right now, like United States dollar is backed by the full force and faith of the United States government to say, well, we say that this is a dollar, so it is a dollar.
Yes, correct. Exactly. It's just a confidence game. Like if 10% of the people went out tomorrow and were like, I don't believe the dollar's worth a thing, the thing would collapse like that. It would be gone. It's all confidence. And if people all of a sudden don't have confidence in that dollar, then it's an end game. So I was a person who used to think that the dollar was going to collapse in the last 10 years because it was like, wow, this is insanity. We've never seen it before. But now the more you look into it, the more you study it, I tend to think like, hey, it's going to go on for a little while here still. It's gonna because truly, like, you have people who say, hey, this can't go on forever. Look at this debt. It's insane, which is true. But then you also have people over here that say, well, the dollar's not going to collapse because it's basically might not be backed up by gold and silver, but it's backed up by the U.S. military. So like if something happens, so like which both people are right. And that's where like being in the middle and the edge of the coin, seeing both sides is important because you have to be able to prepare for both ways. So, but negative.
Well, it's interesting though. You're right, because it's like our balance sheet with all the problems that America has and our trillions in debt and Social Security being underfunded, and Medicare being underfunded, and all the printing we're doing. But most of the other countries are worse off than we are, right? So
yes, that's the thing. I think that's truly the reason we haven't imploded yet, or the dollar hasn't collapsed, is because everyone is attached to us, and it is so global now that we're all like, if one person goes down, we all still go down as dominoes. So that's where everyone's very careful, they're posturing, because it's so globally linked. We're like before, even like 30 years ago, 40 years ago, as recent as that, it was only a handful of countries in the world that were like on the global stage, on the global market. Now it's 100 countries. Like everyone in the world is really involved in the markets now, and trade and everything. We just didn't have that before. So now it really is like, if one person goes down, it starts to domino. And that's why everyone, I think, is very careful. And that's why I think it will last longer than, like, say, a Mike Maloney, who I really respect and who's taught me everything basically I know about money and currency and the differences. And he's an incredible guy to go watch. But he thinks, he's got a gold dealership, so he's kind of, pedaling a little bit more on the side of like, hey, this is going to collapse. It's going to collapse. Well, yeah, I mean, it will collapse, but it might be another 10, 15, 20 years, it might be a little bit longer than the average, because I think every 40 years, we're usually on average, there's a new monetary system, basically, or 40 or 50 years. And we're basically at year 40, 50 right now, but it probably go a little bit longer just because we're in some different situations. But yeah. And then going back to, sorry, I went on a tangent, but the negative rates, the reason that negative rates are so important for people to understand, even now, because like we actually have negative rates right now. So if you look at a real rate, so sometimes you'll hear people say, what are the real rates? And the real rate is, what is your interest rate minus inflation? So your interest rate is 0.05% or whatever, or point,
you mean like
just say it's 1%.
Safe money assets, like in the bank.
Exactly.
Okay.
Exactly. So say it's 1%, but inflation is 2%. Well, 1 minus 2 is -1, right? So you actually have a negative interest rate or negative rate on your money. So you're actually losing money by just
if you have your money sitting in the bank or in something safe like U.S. Treasury bills,
correct.
you're actually losing money because your rate of interest is not enough to keep up with the pace of inflation.
Exactly. Exactly. And that's if you believe that the inflation rate is only 2%. And like so that's a government number, right? So like that's something where food prices, as we've seen, have been meet all-time highs, or not all-time, but highest prices in 50 years, stuff like that. So inflation's happening. We haven't seen it in food or a lot of consumption products, other than like, well, your chip bag has 50% less chips in it, or things like that. Like
that's the hidden inflation, right? That's the things like whether it's cans of tuna or a bottle of Powerade, they keep the price the same, but they make the package smaller.
Exactly. Yeah,
and you're right. They tell us that.
Yeah.
Sorry, I'm getting all excited over here. Yeah, because you touched a nerve with me, because it infuriates me when the government does this stuff, or when these companies do this stuff. Because like the government tells us, well, the rate of inflation is only 2%. Like, what are you measuring? Because look at the cost of college, the cost of healthcare, the cost of food goes up, or maybe the cost of food doesn't go up. Maybe it's the same price, but you're getting way less for the same price. So they're doing a lot of this hidden stuff to try to fool the American people.
That's where, and that's where we said earlier, you and I were saying that earlier, where it's speaking a different language. Like if you understand that language, you can see through the BS, because a lot of it's there in plain sight for people to see. It's just most of us don't sit back. That's why I think the pandemic in a lot of ways was such a good thing, is it gave people the opportunity, if they were so inclined, to sit back and like take survey their surroundings and be like, what is truly going on in my life? What's truly going on in the government? What's truly going on everywhere? You can take account for those things. So like you just said, I mean, they're doing things in sneaky ways, if you aren't paying attention, to debase the currency. Most people just don't see it. So like negative rates, actual negative rates, they might be paying you for a mortgage instead of you paying interest on the mortgage. And they're seeing it, like in Denmark, they're doing it. I think in Japan, they're doing it. And so like you might be getting paid. Germany, actually, I think they're doing some negative stuff. So you might be getting paid. And that's why, like, being in real estate, owning a bunch of rental properties, and you got leverage on that. Well, I might be getting paid interest on those properties now instead of me paying interest. What better way? Because they want you to move. Basically, they're saying, we want you to go move your money and go consume, spend it, get into more debt. That's what they're saying. They don't want your money parked. That's why we're at negative rates, because they're like, get the money out of the bank, go move it. The government tells you what they want you to do, whether it's through the tax code or through rates. That's why they're telling you what we want you to do. So negative rates are super important, because most people just save their money in the bank, in retirement accounts, whatever it might be. And the stock market could go up because people are going to be moving, some of the people will be moving their money out of the bank into the stock market, moving into real estate, whatever it might be. But just having your money parked is not how you're going to be successful going forward, because, it worked in the 70s, like when our parents were growing up, because you had 15% interest rate, like you could retire, $100 million in the bank would give you $150,000 a year. That's amazing. Right. So,
well, right. That's the thing. You used to be able to live just on the interest of your safe money investments. But now you can't. You're getting like a paltry 0.25% return, on your safe money. So in my business, we call that Tina, Tina, like the woman's name, and that stands for there is no alternative.
Yes,
that means you have to take the money out of the bank and you have to put it in the stock market to try to get any return. But when that happens, it's almost like a Ponzi scheme. It's like supply and demand. Like the more money that goes in, at some point it has to go up. But the more they manipulate the market, they cause these big crashes. And then it's like the wealthy, savvy people who they come in when the market's low and they're sitting on a bunch of capital, like they have access to capital. They can come in and buy a bunch of stocks for cheap. And even Robert Kiyosaki talked about that in 2008. It's the people who know what they're doing, who have access to capital during the crashes. They get richer than ever before. It's like your average person gets killed, but the wealthy get even wealthier because they understand the rules. They understand how things are manipulated and how to take advantage of the stock and real estate markets. So it's really interesting. I don't want to keep babbling because I have a couple other like really important questions I think I need to ask you. Because we chat, we could chat for 3 hours. I'm trying to keep it like an hour, 15, hour and a half. I knew that you and I would go longer than my traditional 45 minutes. I knew we would go longer just because this topic's so fascinating and so detailed. But the other question, I want to go back to like the low and the negative interest rates. You and your company, you guys are doing some very interesting things to bring in your family, to bring in your friends, and to give them incredible opportunities to help guard against some of these changes that are happening. Can you speak to that and just, give us a brief description of what you guys are doing?
Yeah, so we touched on it before a little bit, obviously, with like what we're doing, and like it piggybacks off of like if we go to a seller for example, and they inherited a home and they want to get it sold quickly in the next 7 days, 14 days, we might end up buying it cash right there from them, and then we would take that, go, be under contract with them for say 14 days. We would go either have money raised already, or maybe it's on standby, and then we go raise that money in that next handful of days. We try not to use our own money just because we don't want to outlay all of our cash. And there's two reasons. One, we don't want to outlay all of our cash. And also we want to, more importantly, like you just said, bring in other friends, family, business partners, associates, whatever it might be, bring them in to then make money with real estate and bring them into this awesome game, really, where we can go in, take that capital and then go rehab the property, fix it up, make it awesome, really top end of the market or just below top end of the market, and go put a renter in there and then go refi the property, refinance it out within, it could be 30, 60 days, or it could be up to a year, but somewhere in there where you're going refinancing out all that money. So each lender, could be family member, like I said, whoever, they're getting an interest rate for that year. And you would divide it by 12. So say it's 8%. You divide it by 12. That's what they'd be getting each month. So it might be a couple $100 cash flow a month that they're getting and being secured to real estate instead of their money sitting in a bank, earning them negative rates, as we just said. It could be an actual negative rate or a negative real rate, which is we have now. And so they're actually earning 8% on their money and getting that secured by real estate. And it's unlike we were saying off air, FDIC, something that, the government's securing it for you. And as we know, it goes in the bank. It's not your money anymore, not your currency anymore. So you're actually getting something tied to an actual tangible thing and giving you a return each month, true mailbox money, because our team, our systems, our property managers, our contractors, they're the ones doing everything. We're managing it all. And then they just get a check every single month for their cash flow. So say someone put 20 grand in, like if you went and bought $100,000 property, an investment property, you would need 20% down at least. So you need $20,000 for a down payment. If someone gave me $20,000 to go invest, they would be getting probably anywhere from $125 to $200 a month, just depending on what's going on. So you would be making that, even if you bought the property yourself, you would probably be making that in cash flow each month. If you put 20 grand in and bought it, and then you would manage it yourself and had to do all the numbers and the bookkeeping and accounting or whatever, you had to do all that. If you came and invested with us, you'd be getting the same exact amount of cash flow, but you have to do nothing. You're just getting the mailbox money every single month. You're getting a check for that amount, for that cash flow every month with that money. So that's what we're doing basically going forward.
When is the principal then return? Like when the house is refinanced or then sold again? Like how does that work? Because I'm really fuzzy on this, but I've already told you I'm kind of like super interested in like learning what you guys do specifically.
Yeah.
Here.
Yep. So that, and by the way, my kids are home, so they're ringing the doorbell. So they're just in mind of their own, right? 3.5-year-old and 1.5-year-old. Yeah. So you basically, what would happen is we come in, like if we can, so say it's say it's a $50,000 property. We go in and we're like, hey, it's a $50,000 property and we need to rehab. The contractors go in there, we get some quotes and they're like, hey, it's a $50,000 rehab. And then it's going to be, at the end of the day, it might be 150 it'll be worth when it's done after it's rehab. So we bought it for 50, put 50 into it, and then it'll be worth 150. So we go in, we raise the money to do really both, to purchase it and to do the rehab. So, we might, I might put a little bit into it as well. It just depends on the situation. The beginning, I'm going to be putting a little bit more into it. And then as we go, I'm going to be putting less into it because we're going to be more the ones just managing it and with through the system. And then we will, so you go in, you raise that money, and then you go close on the property. And then, so everyone's has, you know, a lien on the property and with the mortgage. They have each lender has a promissory note through, you know, us with us, and it's saying these are the terms, this is what's going to happen, the repayment schedule, what have you, interest rate. And then everyone's on insurance as well, and on title. So all the lenders, if we can go find one person that wants to do the whole $100,000 or, you know, then great. But it could be 5 people, you know, doing $20,000 each. And then, so if you have that, each person would get those things. They'd be on title, you know, all the docs, mortgage, have the lien, everything. So you're basically putting people together. And like in apartment complexes, they have it, you know, it's called a syndication, where they go do that, where they have $1 million property and they need like, oh, I need a $200,000 down payment. They go get 3 investors to give them, you know, 66 grand each, or whatever the math is. So that's how they would do that. So same thing here. It's just right now we're at the single family level, and we're getting into a small apartment complex, and we'll get into bigger apartment complexes and true syndication as we grow. But that's what we're doing right now. We go raise that money. Everyone's on it. I close on it. We close on it. No one else has to do anything except, you know, get their check each month. So that number is, like I said, it's 50 grand, like all in. And then, so we refi, it praises for 150. Then what we do is we refinance out the lenders. And then, so each month you get your check for, say, $150, we'll say $140. So you get that check each month. And then when it gets refinanced, you get your $20,000. So like, say there were 5 people, it was $20,000 each, you would get your $20,000 principal back. And then you'd have your $20,000 plus the interest you made for, say it was 6 months. So 6 months times $140. So you would have that, what you made in interest, and then you'd have your principal back. And then our goal is to do that all the time, and like have people to say, okay, great, like when's the next project? Like, you know,
right, let's do it again.
Yeah, let's do it again. I'm gonna give you 40 next time, or hey, here's just 20 again. Like, just keep this 20 grand moving. Like, I just want to
keep it rolling.
Yeah, keep it rolling. So that's
like the velocity of money, keeping your money moving and working instead of just parking it somewhere and losing value.
Keep making 8% a month, or some, it could be 6%, 7%, 8%, could be 9 or 10%. Somewhere in that range is probably gonna be 6 to 10%, just depending on the project. And then instead of making, like you said, negative rates sitting in your bank account, or whatever it might be, or you're scared of the stock market at the time, or whatever the reasoning is. So
So okay, so that kind of leads. I wrote down some questions I wanted to ask you. Obviously, we've already covered a bunch of them, but another one, and you're kind of getting into it right now. So I just want, is there anything else that you want to say in regards to? Look, I mean, other than the cash flow, there's 2 huge benefits of real estate, and that's using debt and taxes to your advantage. Yeah. And you've talked about that a little bit. Is there anything else that you want to touch on, like other advantages to using debt and taxes that you haven't already covered? Because you've done a lot, obviously.
Yeah. I mean, so debt and taxes are huge, and that's where, again, this is a Kiyosaki thing that he talks about all the time and rails on it all the time. And it took me years to actually kind of figure out what he was saying, or like why he was saying it. But truly, like, so if you have a financial statement, you have income, expense, assets, and liabilities. And you got the income column is where you have cash flow coming in. The expense column is where you have the depreciation, and that's the, like, a phantom tax, or like it's phantom income, whatever. So that's there. Then on the asset column, you have appreciation. So your thing going up in value. And then you have amortization on the liability side. So your thing being paid down, and your tenant's paying it down as things go forward. So those are like the 4 incomes you get from investing in real estate.
Right.
So debt, the cool part about debt is that when you go get good debt, you get a bad debt like buying a jet ski, and you could turn it into good debt if you go rent the jet ski out, and then you're making more than your payment each month renting it out.
That's really likely. But
exactly. I mean, most people aren't going to do that. So getting a rental property and using that debt, so like me going to raise money, for instance, I'm living that philosophy, because I'm going and getting into good debt at cheap rates. And really, I mean, someone might say, hey, 8% is not cheap. Well, historically, it's fairly cheap. It's for probably maybe average, but it's a decent rate. And then I can go refi it, and that's where the power of this comes in. I can go refi it into a 3 or 4 or 4.5% interest rate and cut that in half, raise the mortgage on it a little bit. So now say the mortgage is, say it's 150, or say it's 140, and then I can get 25% out. That's like, and now I'm left with like 95,000. So say we were only in for 90, And the refi, I can take 25%, 75% loan to value, and then I can pull 95 out. So that means I pay my lenders back $90,000, their $90,000 principal, and then I get the $5,000 left over tax free because it's debt. It was actually debt on the property.
Correct.
And that's where in the amount, my mortgage is more now than it was initially, the mortgage amount. So my interest rate's lower, but my mortgage amount is higher. So maybe my payment each month hasn't changed. It might not have changed, which is fine because now I've got $5,000 in tax-free money. I can go buy a jet ski if I want, or I can go invest in another asset tax-free. Yeah, tax-free now. And then my renter is paying off that mortgage now month after month after month and month. So that's using debt to your advantage and using it in a positive way. And through
good debt. We're really making
good,
that distinction, like good debt or leverage for business purposes and cash flow purposes.
Exactly.
Versus just,
credit card and spending it at the mall 24/7.
Right.
Yeah, that's bad debt. Exactly.
That's awesome. Yep. And ultimately, it's a business arrangement and it's a partnership. And there's no a business arrangement or a partnership doesn't work if it's not good for both sides. So it's good for your investors and your lenders, and ultimately it ends up being good for you too because of the long-term benefits that you'll get from the property. Correct?
Yep. And honestly, we're basically, we're doing this, and like I said earlier, we want to scale up to really, 60, 70, 100 unit plus multifamily apartment complexes eventually over the next 5 years or 10 years. And we want to get into syndication where then we can really pull people in and have a place where, and this will happen before that too, but we get into more, small multifamily and mid-sized multifamily, then we're probably going to be creating companies where people are now equity partners instead of debt partners where it's a lender borrower relationship. And then you're out with the refinance. Well, sooner than later, by the next year or so, we'll be creating partnerships, truly business partnerships with people where everyone's in the deal together as equity holders. So that way we're raising money and it's an equity partnership where everyone's getting the cash flow and the tax benefits each month because everyone's in the partnership together instead of, oh, hey, you're just my lender and I'm going to refinance you out and now you're gone. We can come back and do it again, but you're not getting the full effect as a lender. You're kind of getting your feet wet into real estate without having to do everything. If that makes sense. So
yeah, that's awesome. That is awesome.
Yeah.
Look, we're coming up on the end here. It's 2 minutes away from 11:30. You got one other thing you wanted to add on that?
Sorry, I didn't touch on taxes. So really quick, I mentioned it really quick, but depreciation is that phantom. It looks like an expense because it's government that just giving you money, and that's where taxes come into play. If you use taxes to your advantage, and there are a couple of ways that could happen, which is say you sell your house. Like if you sell an investment property, you're going to pay capital gains on it, either short-term or long-term capital gains. But if you do a 1031 exchange, you could defer the taxes completely, roll those gains all into, a couple single families, again, monopoly, 4 greenhouses, 1 red hotel. You roll all those gains into an apartment complex. That can be tax-free. Then you could also do, again, we talked about doing the refis, but the taxes, you can use that through depreciation, like a cost segregation, where you are getting, you're not paying any tax on that cash flow because say you have 10 single family homes or a couple of apartment complexes, you do a cost segregation analysis on it, and you have someone come in and segregate out the depreciation components. Well, you could be looking at a $20,000 loss on an apartment complex, and you might have only made $12,000 that year, $15,000 in cash flow. Well, now you're showing a $5,000 loss. If it's at 15 in income, $20,000 depreciation, you're showing a $5,000 loss, but yet you had $1,250 a month in cash flow that you pocketed every single month.
Wow.
So that's knowing debt, and using good debt, and then also taxes, 1031 exchanges, and cost segregation, depreciation. If you know how to use those two things to your advantage, you're not paying tax. You're not, legally, you're not paying taxes, and you're doing what the government wants you to do. And that's how the wealthy get wealthy.
I was just about to say that because you talked about this earlier in a different segment earlier on in the show about understanding the tax code. They tell you what they want you to do with the money, by looking at the interest rates, they tell you what they want you to do with your money. And it kind of works in my business as well with cash value life insurance, understanding how the tax code treats it and why it's so beneficial. So you never have to pay a dime of income tax if you do it correctly and having access to your capital. And, that's why so many real estate investors park their capital in these policies instead of sticking it in the bank. But that's a whole nother discussion. But we are coming up on the end. One last question that I have for you. And these are people like influences that you follow. And we've already mentioned Robert Kiyosaki. We've already mentioned Jim Rohn. We talked about what's his name? Bucky Fullminster. Am I saying his name right?
Yep. Buckminster Fuller. Yep.
Of Buckminster Fuller. Yeah.
Yep.
Anybody else that like you follow to learn about real estate and business and currency, things of that nature, just for people watching, like, hey, here's a couple people you might want to follow on social media or books or podcasts. You got any other recommendations for us?
Yeah, absolutely. I wrote a handful down earlier while we were talking, actually. All the Rich Dad advisors, like I said, obviously, Kiyosaki is great for context. Advisors good for content. So those are great, obviously. George Gammon is a great one on YouTube now, explaining really how the piping works. Like we talked a lot about, the system and like learning the language. George Gammon is awesome. Like he just started his YouTube channel in the last like year, and Kiyosaki's talked about him a bunch, actually. This guy breaks down like the Federal Reserve, the economic like piping of what's going on. It's like one piece of the piping at a time almost. He just goes through and has been doing that for the last year. So he's awesome. I love watching him. Just in the last few months, I found him probably right, in the end of Q1, right when the pandemic was hitting, and I love him. Jim Rogers is another great one. He's I believe he's a billionaire, I'm pretty sure, but he's awesome. And these are kind of guys like Jim Rickards. He worked at with the Pentagon. He's the first guy to ever like do a financial war game scenario with the Pentagon in the late 90s.
Didn't Jim Rickards write a book called Currency Wars?
Correct. There's 4 of them. Yeah. Currency Wars, Death of the Dollar, Road to Ruin. It's all like a 4-part series. And those are incredible books. So he's an insider. So like he's seeing the inside of the beast, the belly of the beast. So like the great guys, the same with like Richard Duncan is another good guy. So Kiyosaki, Maloney, Jim Rickards, Jim Rogers, those guys are all guys that think like, hey, we're going to collapse and like, we're going to collapse soon. Then you have like Brent Johnson, who I think is kind of in the middle. Like people keep hearing of like the dollar milkshake theory that kind of got popular over the last few months. And he's a super smart guy, runs the Santiago Capital, I think, in San Francisco. And then you got some guys, I think, who are on the other side who think, hey, we're going to be fine. And like we were saying earlier, like seeing both sides of the coin, like we're going to be fine. China is they're in a worse position than we are. We've got the US military. Like, don't worry, guys, like be prepared, but don't be that scared. Those are guys, I think, like Richard Duncan, who is an insider as well. He's a great guy. He's got a couple books like The New Depression Ahead, The Dollar Crisis. And then Muhammad El-Arian is an awesome guy. He is he ran like one of the bigger hedge funds, I believe, in the world, and still does a lot of stuff on Wall Street.
Oh, wow.
And then Harry Dent, I think, is another guy who's incredible, demographics and knowing demographics. And so I think those guys kind of give you, if you kind of follow a lot of those people, it gives. And then Daniel DiMartino Booth, actually, Nomi Prinz and then Daniel DiMartino Booth actually have both. They're 2 ladies that have written books on the Federal Reserve and both insiders as well. Great books to read and kind of follow.
Danielle DiMartino Booth was just on Patrick Bet David's podcast.
Yes, that was a great interview.
Absolutely. Yeah, she held my attention for.
She is so smart.
I was hanging on every word for like an hour and a half or however long it was. It was incredible.
Yes. Yeah. Thomas Sowell is another good one. If people haven't gotten into Thomas Sowell, by the way, great guy to watch. Boy, oh boy. A great Twitter account to follow is Thomas Sowell. It's like Thomas Sowell, but it's not him. It's someone that like just quotes his like quotes from the last 50 years or whatever. Yeah. It's awesome account to you'll get a kick out of it every time you see one of the tweets. They're awesome.
That's awesome. So, well, Brandon, thanks for being on, man. And just wrapping this up. Number one, I learned a ton. Anybody who's watching this, I'm sure, took away tremendous value as well. Where can people find you if they're interested in using your firm for these investment opportunities, or either just to buy or sell, even if it's just like their primary residence? You do that too. I mean, you pretty much do it all. How do they get a hold of you and find you?
Yeah, I mean, on social media a lot. Obviously, Brandon Gentile 811. So Brandon Gentile 811 on Instagram. Or just search Brandon Gentile probably. And then legacygroupmi.com is our website. So one of those 2 places, like, you can kind of see more of what we do on our website. But if you contacting me, probably the easiest way is on Instagram or Facebook too. I mean, connect me on Facebook. Those are probably the easiest ways to connect with me. And our YouTube channel, we do a lot of stuff on our YouTube channel as well. Obviously, it's just at Legacy Group MI. Like tons of content over the last 5 years we put out, and videos and how the markets work and real estate, local real estate updates, all that stuff. So.
Man, that's awesome. Well, we'll wrap up here. Thanks for giving us your time this morning. I learned a ton, and you and I will have to catch up soon.
Yeah, 100%,
Awesome,
man. I appreciate you having me on, Ron. It was a blast. We could do this for hours. So
I know it. We'll do it again soon.
Sounds good, man.
All right, brother.